Well, another day is in the bag. May the 22nd is behind us. The E-mini has broken out of its recent current trading range. We said as long as it stayed above 87.50.90, it could trade higher. Here we are at 92. The previous high of 98.5 is within reach. Everybody all year long has been talking about 1900 is the trading target. We're here, and if you put everything together, you're still looking at a pretty strong P. So higher low, higher high, market is pointed higher. And this is what it looks like when you put it all together. So here we are. We're knocking on the door. I mean, we're at resistance. We go through it or not. If you had to make a trade from the at the market right now, you would do it from the long side. Looking at the F2 screen, does it confirm what we have on the number 1 screen? Yes, it does. Looking at a P, we had a potential move out of the middle and I period. We did go higher. We weren't able to sustain that. But again, as long as we stay above this 87.50 area right here, this last rotate down the market can trade higher. So right now resistance is in the 95 area, then 98, 1900, and then 3 to 5. So selling failure to extend today's range up to 98.5 would be a trade. Then the next trade you'd be selling the 1900 area for sell 2. On the buy side, this 90 to 88 area is pretty good buying. And then our 85, 87 where we were this morning. So fairly strong market, not a lot of volume, pointed higher. We also have tomorrow is the beginning of a 3-day weekend, a long weekend, and the market usually closes up into that, so we can expect a higher, just off the holiday, we can expect a higher opening tomorrow off of that. No major news to drive the trading. Tomorrow's news, new home sales looking for 420K. Okay, tomorrow is option expiration. We'll see what the numbers were for the note today and the T-bond, but we said mathematically the close should be at 125.24 today and tomorrow. We closed the day session at 125.20, so we have a miss there. But it's going to be really, really difficult to close the note below 125.16 tomorrow, in my opinion. Got a lower high and a lower low. If it weren't for option expiration, we'd be pretty aggressively on the sell side. Resistance is held. And now it's time to test support, and the support area is down the 125.04 area, give or take. From a selling, we've got a B pattern. It does favor a little lower in the overnight session. Remember, on option expirations, they try to freeze the puts and the calls in their position so they expire worthless. Based on the way the market traded today, I would say we were dealing with large institutions liquidating calls. if me as a market maker, if I sell you a call, I've got to buy a futures on the ratio of the strike price and the holding period. And so if the market is call heavy going into expiration, you see a little selling. If it's put heavy, you see a little buying. We have a V pattern right here, and that favors a retest of support and our lowers. So got support at 18. We'll make our buy one 15 to 19. Let them spook the 125.5 put holders, then 9 to 13. And we'll verify it overnight. We'll see where the play was. And then we want to sell failure to take out 24 to 28. Backup sell will be 31 to 03. So pretty quiet session. Not a lot to work with. We would probably be lower because of the strength in the E-mini if it weren't for option expiration tomorrow. Okay, the knob spread held in there pretty well today. I forgot to write down the number on the close. I think it was north of 11, but I was remiss. We got 25.20 right now. We'll figure it out. 14, so that's 10 plus 14 plus 20. That's 1102. And that's up a little bit from where it was this morning. Not much. Got a D pattern in the 30-year. And the point was 136 to 138 for options expiration. So letting them go down and get the spook the put holders, I think is a reasonable place. So we'll make 1 to 5 our buy 2. I think we have a shot at that, especially if the E-mini trades up. And then we're at 14 right now. Last rotate down was 11. I tell you what we'll do. Let's make it 5 to 9 for buy 1. And then 29 to 01 for buy 2. Volume is actually moving up. If this market is really, really strong, it's going to take an 11, 12, or 13 to get into. But I think that they tend to freeze. The tendency is to freeze both sides of the market. And I think we might, with strong close in the E-mini, we might have a chance to buy a little cheaper. So a 19 to 23 sell, 27 to 31 sell, and on the buy side, we'll make it 5 to 9, and then 29 to 01. May have to pay 13s to get in. A lot of it just depends on what happens in the E-mini. Well, gold is stuck in a trading range, and I mean, we looking at the F1 screen, show you what we're dealing with. Not a lot of volatility, not a lot of action. So you can see we've got us a seller in the 10 area, really 8 to 10, and we have us a buyer in the 85 area. Pretty, really tight trading range. You can see that the market is pulling together, but it's basically a B. And so it is trying to sell, and the seller, most of the articles that I've read, without a new sovereign debt situation, most of the large institutions don't see the chance to make a lot of money in gold, so they have not been accumulating positions. The buyer's been the retail account. Pretty clean break in the market right down here in the 80 area, so 75 to 85 is pretty good support. And we've had a very, very hard time holding 12s right here. Today's pattern was a B. It favors a little lower tomorrow. Again, I don't think the market will break, but I do think we are headed lower. Let me hit the screen up here. There it is. So we're looking at a double distribution down, and we're right back where we have been. So this 90 area plus or minus will be 1, or buy 1. 85 area plus or minus will be buy 2. The spill was from 97.50, so we'll make 98 to 1300, sell 1. And then 3 to 5 for sell 2. Pretty much where we've been. The more time you spend in development moving sideways, the bigger the potential move when we come out of it. And the structure says that move will be lower. Okay, crude oil. Looking at the F1 screen just to maintain perspective. New York likes to start things early. My guess is that what action we'll have will be in the morning, and anybody that can leave their offices at noon to start the long weekend, the first weekend of summer, will be out of there. So we've had a hard time holding 105. We're close, and got a very, very clean break in the volume here right below 103. We're at the top of a trading range. If peace breaks out around the world, we should sell because of the increased supply. But the Libyan oil right now is in question because of the recent attempted takeover assassinations in that country. So we have increased production from Iran, with the United States blessing, of course, Iraq and the United States, and we were getting increased production out of Libya, but that's on the it's been tabled right now. So we're at the top of the trading range. Unrest around the world is taking us up. Got a P pattern that we're dealing with today, but resistance is held. So I think we'll probably pretty much keep the same numbers that we have had. Want to be selling that 104 area. Then I think if we bust through that 104.25, no reason not to go to 105. Also, we have the start of driving season with Memorial Day, so a lot of reasons. Okay, 103.50 to 25 will be buy 1. 275 to 103 buy 2. On the sell side, 104, 4 1/4. If we have to get, I'm putting 75 to 105. I mean, I'd like to be short and go against 105. I wouldn't question that trade, even without barrels to deliver in. I was reading that the Thailand coup is their 12th military coup since 1932. They've got that down pat. It's all rehearsed. I doubt if the citizenry even blinks an eye. Only the names change, right? Okay, we've had very little recovery in the euro when it sells. We've got pretty good selling above 37.25. You'll see that. We'll look at the F1. The low volume is 36.25. Looks like we're headed that way, so 36.25 would probably be reasonable support. Right, here's your low volume number, and you can see we're dealing with a couple of pretty pronounced Bs, and the market is pointed lower, and we have this attractor way down here at 135.25, 135.30. A lot of low volume numbers to get through that, but I mean you can see we got a little high volume number just below 136. Bust 80, then we head down to 135.25 plus or minus. I think this market is pointed lower, and the reason again for that is the fact that the European Central Bank wants the euro lower. And poor old Mario Draghi couldn't get anything his way all of 2014 until late. Now things seem to be going his way. So I like the sell side better to anticipate a retest of the current low in the 36.30 area, give or take. Got a B pattern. Last rotate up stopped at 57. Top of value is at 60, 65. So we'll make 60, 70, sell one. Back to where we wanted to do it and where we did recommend doing it last night, 85 to 95, sell two. On the buy side, I think we could go lower, so let's put it 25 to 35, play against that low volume number. And then 36, 36.10 for buy two. That's all I have for May the 22nd. Let me go stop the recording.